Oh, that's right, Chamberlain. We cannot say this is the end of the matter because this is not the first time we're discussing budget padding in the country. We thought it was over, but obviously not, even with the promise of President Bola Tinubu that there'll be nothing like padding. We are still holding this conversation, and obviously still an ongoing one. But let's do business now. Good morning. Welcome to Business Morning on Sunrise Daily, and we start from the global space as usual. We tell you that oil prices rose on Wednesday on expectations of strong global demand, including in the world's top consumer, that's the United States, and even somewhat sticky inflation. Inflation was out yesterday from the United States, and even though it was up, they say it is still within the expectations. But let's look at the numbers right there for this morning. Still struggling to head back to $83 that Brent was on last week. We see it at $82.38 a barrel after gaining 0.6%. Same addition to the WTI of the United States, but we see that has gone up to $78.03 a barrel. Now, when we look at what is contributing to this, U.S. inventories and fuel inventories fell last week. So that's one contributor to that. That's according to the American Petroleum Institute. Analysts still believe that the Federal Reserve may start cutting rates in summer, despite that inflation number that came out yesterday, which was higher, led by cost of gasoline, shelter, suggesting some stickiness in inflation. Lower rates obviously support oil demand. So they're still looking at June for the beginning of that cut in the United States, but I mean, time will tell. Oil prices are also under pressure in the previous session after the U.S. Energy Information Administration raised domestic oil output forecast, but declines were limited on expectations of OPEC Plus cut, which they have extended. Slow global oil growth, and you know that China also contributes to that. And on the recent wave of drone attacks in Russia, including refineries, we hear Ukraine say they are now in Russia doing their own attacks. So this, at the end of the day, affects other countries around the world. These are two major contributors to commodities globally. Talking about commodities now, grains, Chicago soybean futures edged lower on Wednesday, although they were hovered near 1 month highs after Brazil's crop agency cut production forecast for the country, testing speculative investors who were bet heavily on further price drops. Let's look at the numbers right there. Soybeans, we see there 0.2% down at $11.93 for 3/4 of a bushel. That's for soybeans, and then it hit $11.97 yesterday. That was the highest since February the 13th. Then look at corn right there. Corn remained unchanged, not enough force to move it for now. $4.41 for 3/4 of a bushel, and that's after it climbed to its strongest on February the 6th. It was $4.45. That was the highest since February the 6th. Then both crops are down this year, fell to their lowest since 2020 last month. Let's look at wheat. Wheat gained 0.5%, $5.50 a bushel. That's not far from Monday's low of $5.24. Now, crop agency CONAP lowered projections for Brazil's soybean production by 2.6 million tons to 146.85 million tons. In other crops, Ukraine's 2024 combined grain and oilseed harvest could shrink to 76.1 million metric tons from 82.6 million metric tons last year and 107 tons before Russia invaded. To Nigeria now and see what's happening back home in Nigeria another time. I think it's the 7th time this year the central bank has raised the exchange rate for calculating customs duties by 1.9%. So it went from 1,593 naira 88 kobo for $1 to 1,624 naira 73 kobo. Remember that the CBN had said that whatever rate is on the Form M is what will be used all through a certain transaction, but we still see this movement. Well, the decision is effective 12th, that was yesterday, March the 12th, and follows the continued drop in the value of the naira. Also, the 1.9% hike represents an additional cost of over 30 naira on each dollar needed to clear goods. 30 naira added to each good you want to clear compared to the previous rate. Meanwhile, some port users have expressed discontent with the CBN new policy of linking import duty payments to the exchange rate on FOMEM submission, as this, they say, will introduce more hurdles in an already challenging trade environment. We're going to come back to this in a moment to see some of the implications of this and see if there are better ways to handle this issue with the drop in the value of naira. Meanwhile, the president of the African Development Bank, Dr. Akinwumi Adesina, is calling for an end to loans tied to Africa's vast reserves of oil and critical minerals, often used for the production of smartphones and electric vehicles. Dr. Adesina, who made this known during an interview with Associated Press, warns that these deals exploit African nations and hinder proper valuation of their resources. At least 11 African nations have taken such loans since the 2000s, mainly from China and Western firms like Glencore and Standard Chartered. To combat these challenges, Dr. Adesina emphasizes the need for renegotiation and transparent, equitable agreements and fair benefits to safeguard Africa's economic interests. It also proposes AFDB's Alliance for Green Infrastructure, which aims to secure $10 billion for sustainable projects on the continent. Well, this is not the first time Dr. Adesina is bringing this up, and we know that even here in Nigeria, some of the crude we have underground have already been used for one loan or the other. So I guess, as Dr. Adesina suggested, if there could be a renegotiation, but you must have something to bring to the table for you to have the strength to renegotiate. So Africans will have to look inwards. I tell you, a whole lot of areas that we will have to. Now, let's go back to that FX rate issue with customs and beyond. And we'll be discussing that this morning with the founder and chief executive officer of Nairametrics, Mr. Ugodre Obichukwu. He joins us virtually from Lagos. Mr. Ugodre, I think that's what everybody knows you as. It's so easy to just call you Ugodre. Good morning. Good to have you on the program. So this is like the 7th time, I believe. I mean, Nairametrics, you guys follow the news, so you may correct me, that we're having this, even after the issue about the Form M, which is to be used for transactions and all of that. It seems we're not able to get a steady rate in the customs area for the imports of goods.
Thank you so much for having me. It's always a pleasure to be here. Yes, let's all remember that we are now operating essentially, managed float, as they officially like to call it, even though we think it's almost a free float that we're operating. So what then that means is that you're going to have this consistent move of the exchange rate for government agencies like customs, who tend to charge their own fees or their own revenues in dollars, even though you get to pay in naira. And so, but the impact of this is this has a feed immediately into inflation rate, because a lot of the goods that we import today, a lot of the things that we consume today in Nigeria are imported. You did also see data from the National Bureau of Statistics last Friday, stating that we spent about 35.9 trillion on importation last year, and a lot of that import was towards the end of the year. And that just, we still managed to get a very slim trade surplus. But remember, that was at the exchange rate of about 900 and something naira, which was the closing rate at the time, or the average rate at that time. Now we're at 1.6. So expect that our import bill is even likely going to be higher than it currently is. So, a lot of people have criticized the customs for doing this, or the government for doing this, but let's bear in mind that this is also a government that is looking for revenue, and customs is one of the major departments or ministries of the agencies of the government that provides major revenue for them. And so the conventional thinking now is, how do we approach this? Are you going to keep changing, the exchange rate on a regular basis, or are you just going to adopt maybe a flat exchange rate? It's unclear how, this policy or how we're going to address this issue, because what it then means is that people who import would find it difficult to also plan. They find it difficult to also project because nobody knows what the exchange rate will be a month from now. So if you're importing goods and you don't know if the exchange rate is going to weaken or if it's going to strengthen, then not really sure how to price your goods. But to the government, look, all they are doing is that exchange rate is not fictitious. They're not getting it out of the air. They're probably looking at the average exchange rate that you have over a period of time, and then they use that as their own conversion rate. So all the implications all around. But the good thing is that we have some exchange rate stability to an extent over the last 2 weeks. We've seen exchange rate hover around 1,600 naira to the dollar. What is also interesting is that the disparity between the official market and the parallel market has also slimmed. I think it's about 0.2 or 0.3% when we check. Probably the lowest we've seen in a long time. In fact, the last time we saw something like this was in 2018, 2019. So that provides a little bit of comfort, even though 1.6 is still pretty high for a lot of people, but at least we're not seeing a lot of the upswings that we saw in February.
Yeah, well, I think one thing we've achieved is that closing of the gap to a large extent between the black market and the official market. But what do you think will happen? Since the CBN has said we're running a willing buyer, willing seller market now, what will happen if they allow that to rule with the customs rate?
So I think that the reason why it's a challenge now, it's because the perception is that the exchange rate is weakening. So it's not like it's strengthening. If it was strengthening, I don't think anybody would complain. So it's because it is weakening. And if you listen closely to the CBN's policies and their strategy, they are saying, look, let us try and sort out price discovery. Let's, as much as possible, make sure there's transparency in how the exchange rate is determined. You don't want speculators determining exchange rate. You don't want foreign agents, in quotes, determining exchange rate. You want the exchange rate to be determined fairly by the market. So once you're able to achieve that, then you can now start to work on other levers or, official levers that you know typically affects exchange rate. And so the next step that you've seen is now increasing the interest rate. And so you've seen MPR go to 22.75. You've seen automobiles go to 21.05, which actually is the highest we've also seen on record. You've also seen treasury bills go up as well to almost 20%. And all that is geared towards trying to attract foreign investor inflow. By the way, we call that hot money inflows because that is foreign portfolio investors inflow. So the thinking is that if you're able to attract foreign investor inflow, albeit for a short period, 6 months to 1 year, then that can provide enough liquidity to achieve exchange rate stability. And that can also be the right buffer to have a lot more foreign investors start to come back into Nigeria. According to the CBN, they claim we had $1 billion or so in February in terms of FX inflows. And no surprises, a lot of that inflow went into purchasing government risk-free securities. Because, that interest rate is mouth-watering. And so their thinking is if they can try and solve that part of the problem, then you can start to see liquidity come back. And then perhaps you will start to see exchange rate strengthen. I read a report as well, which we also covered at Nigerianpolitics. I think it was a Goldman Sachs or so report that suggests that exchange rate could fall to 1.2 in a year. But a lot of this prognosis all depends on supply. That demand is not going anywhere. We're likely going to keep importing for a while. In fact, our import bills would likely expand. Oil export is no longer, that doesn't provide that sort of buffer that it used to provide for us several years ago. We're not producing at the sort of rates that we should be producing. So all in all, what we do need is foreign investor inflow, and that comes at a huge cost. So the hope is that, as much as that, I use that hope quite gently, is if you continue to attract foreign investor inflow in the short to medium term, then the fiscal side probably will have enough time to try and fix a lot of fiscal bottlenecks that we have, because you cannot, and I've said that several times, you cannot have exchange rate stability if you're running the kind of fiscal deficit that we're currently running in the country.
Yeah, and the bottom line is, if we want a permanent solution, as you noted, we have to take care of our supply. And if we keep depending on the hot money, I don't know, that's kind of risky, because I think we remember what happened a couple of years ago when, especially the NGX felt it, the foreign portfolio, the hot money just went hot, and fizzled out. I wonder what's going on with our non-oil sector. The agriculture sector, for instance, I mean, we can't even feed ourselves at this time. We're a threat of food insecurity everywhere, not to mention exporting, so that we can also boost this. I mean, these are real investment that can sustain the supply into the country.
Exactly. You hit the nail on the head. So we are predominantly a mono-export economy, and it's been like that. So several governments, whether it's the Jonathan government or the Buhari government, they've tried their best to diversify our export potentials, but it really isn't working. And not the fault of manufacturers, because they have tried their best to try and create a semblance of competitive export market. But there are a lot of challenges on the fiscal front. Even the central bank, the past one, as much as a lot of us try to malign them, also have tried. They've created all sorts of incentives to drive non-oil exports. But if you speak to exporters, they tell you clearly that it's probably a lot easier, right, to import things into Nigeria than export. That is just so difficult. And so they can't just compete. And then you are now trying to face an export market that is hugely competitive. I was reading something earlier today, I think it was the CEO of AFDB or so, that was saying that, as former Agri Minister Additional, was saying that we've basically just lost out on the agri market, the agri export market, because over the years, we've sunk in a whole lot of money into the agri sector to make us self-sufficient, and such that we can even have enough to export. But that also is not happening, and that also speaks to some of the challenges that we have in Nigeria. So it's one thing for us to try and solve this exchange rate problem or the economic crisis that we face from a monetary perspective. There's a huge role to play from the fiscal side, and that is where the coordinating Minister of Economy comes in. So all we hear is just sound bites and sound bites. You don't hear anything concrete. It doesn't seem like there's any solid plan, such as what the central bank has. Even if you don't agree with the plan that the central bank has, at least they have a plan and they are implementing it. But what plan have you seen from the fiscal side? I haven't seen anything concrete. So it's just all over the place. So you need that side to really do the coordination job that they said they want to do, so that everything comes together and we have a holistic picture of where we think this economy is going. Trust me, no matter what the monetary policy side does, it can only last for a period. They can't continue to pay 21% in high interest just so that you can suck out money supply and attract foreign investors. If you don't fix the fiscal issues that we have, we're all going to come back here again, because the demand for FX is not waning anytime soon. And so that's the challenge that we have. Like I've always said, Nigeria does $90 to $100 billion in FX annually. That is the sort of demand that we have. And a lot of that money comes from foreign investors, some come from crude oil exports, some come from remittances. So we're seeing remittances pick up, we're seeing foreign investor inflows pick up. But what about crude oil exports? Are we going to remain at $30 to $40 billion annually? Is that enough to give us the sort of exchange rate parity for gone are the days when oil need to get exports from other areas of the economy, and you can't do that if you don't have a government that's serious.
Wow, food for thought there. Thank you so much, Mr. Ugodre Ubichiku, CEO and founder of Nigerianpolitics.
Thank you.
All right, talking about the Naira, let's head to the market now. Yesterday, a bit of good news on the NAFEX platform. We saw that the Naira strengthened, gained 8 Naira 78 kobo to close at 1,603 Naira 97 kobo. So not very much right there, because we're still around the 1,600 Naira area. But at least it was a gain yesterday, 8 Naira, more than 8 Naira right there. Let's go to the NGX. We saw it's a continuous bullish sentiment right there. The market gained 1.47% and brought us back to the 103,524 Naira. 0.44 trillion. And then we see the equities cap also gained a lot of money, went into the portfolio of investors at the close of trade yesterday. 836 billion Naira is a lot, as we see that it jumped back to 58. We're heading to 60, so hold your breath. We'll get there. So 58.53 trillion Naira for the equities cap, the market value of the NGX as at the close of trade yesterday. Looking at the activity chart for yesterday, it was a lot of positive, or just value was down more than 16%, but we see deals went up 11,000. Been a while since we saw that much deals in the NGX. Volume also gained almost 30% at the close of trade. The sectors that did that yesterday, of course, trustifugas, they're always the first picking for profit taking, for cherry picking. It's the banking. Banking gained yesterday more than 5%. Consumer goods and industrial almost unchanged. Insurance is coming back up, even though it's too soon to say. It takes a while for insurance to really regain some of the losses it had last week, but gained 1.18%. Oil and gas also managed to come up yesterday, 0.12%. Top trade still leading. Transcorp Power still doing its thing since it was listed. I bet investors who were able to jump in have been smiling on how much they have gained on their stocks. Accessco also was a top trade stock yesterday, as well as GTCO. So that's why you see the banking sector was up for the figures right there. The unlisted market will jump right there now and see a negative trade again. It's been consistent at the NESD. It was down 0.13% for the NESD at 1,080.35. Market cap is still around 1 trillion Naira, 1.46 trillion Naira at the close of trade. The activity had a lot of green also. Volume went up. Value was down, very down at 68.75%. Deals went up, and stocks traded also 7.4 compared to the day before. It was about 75% up. Then we go to the fixed income market yesterday. We have an auction today, which we expect. But let's look at the trade there yesterday. We know this is where Mr. Godre was talking about, the federal government raising the rates to attract investors, especially foreign investors. So you see, yesterday we had 23 deals valued at 21.43, and we had a lot of activity around March 25th security for yesterday right there. That's for the NTB, becoming very popular. This is where the foreign investors like to look, because a lot of them are short term, and like he said, it's hot money, so they don't have a lot of patience. They just want to come in a couple of months, max a year, if at all. They get their money and get out. And then for the federal government bonds, yesterday we had 20 deals valued at 48.8 trillion Naira right there. And we see the June 2038 security was the most attractive. So we have an auction coming today. We also had OMO yesterday. OMO had only one deal. CSB had only one deal, also valued at 1 billion Naira. But let's talk to Demola Oshitoki now from Access Bank to give us some expectations. Demola, hi. Good morning.
Good morning. Thank you for having me.
Yeah, good to have you. So we have an auction coming on today. What are some of the details of that auction, and what's our expectation?
So there's an NTB auction that's taking place today where 161 billion will be offered by the DMO. And the expectation is we expect to see these elevated rates. If we compare it to the last NTB auction, we saw rates close at about 21.50%. So it was quite interesting that we saw these close quite similarly to the auction within the previous week, which closed at about around the same level, 21.50%. So within this auction, it's only 161 billion. What we're expecting is we're expecting the DMO to continue the trend of providing an additional allocation. And the drive for that is in the drive to continue to keep these rates elevated. We know that at the last NTB auction, FPI involvement was at about 75%. So we know that they're using this as a good measure in terms of bringing in some of those FPI inflows, so essentially to help to provide some short-term stability for the NAFEX. So the expectation for today is we expect an additional allocation to be provided, and we're expecting to see similar rates. So this should probably hopefully close around that 20% level, so which should be a good return in terms of yields for a lot of players within that space.
Yeah, so Demola, can you give us more details, like how many units of sale, what are the prices, the maximum, the minimum, and all of that? Could you please share that, at least for our viewers?
Yeah, so for today, it's 161 billion, essentially, which is going to be on offer across the standard maturity. So for the 91, the 182 day, and the 364 day, essentially, what we're expecting is, a similar trend. What we've seen within the previous auction is they tend to oversell across, especially the longer end, which is the 364 days. So expecting that today, that similar trend will persist, where we'll see some additional allocation made, especially at that long end to the 182 as well as 364 day today.
And do we still see the foreign investors interested in the short-term securities?
So yes, largely we're seeing them that interest as well, because we know that at the last NTB auction, at the short end, it was about 17.24%, which is a good return in terms of investments. The 182 was about 18%, and the 364, as I mentioned, was about 21.50%. So a good return essentially for investors. So expecting them to play within this space, as you mentioned, they like that hot money. So essentially they're going to look to play within that space. So we should expect our FX numbers to be elevated within this week.
Yeah, but I mean, I guess we shouldn't get too relaxed. This is hot money, can come and go at any time. Yeah.
I 110% agree with you. The true thing we want to see is we want to see that proper handshake between the monetary policy as well as the fiscal side. So we can see that the CBN governor has been very proactive and consistent in his approach of keeping these rates elevated. So long term, what we'd want to see is a proper alignment between the fiscal side as well as the monetary side to ensure that we have that stability. So essentially, we're not just counting on hot money, because as you mentioned, the thing with hot money is it can come and it can go, so we want to have more stability, because especially within the NAFEX, we don't want to see further depreciation. We know that quite recently there was a circular that came out rather from Goldman that said, we're looking to end at about 1,200 at the close of the year, and the hope is that, if we continue with this drive, the DMO CBN have been proactive in terms of keeping rates, elevated, which is good in terms of providing, short-term stability, but long term, what we want to see from the fiscal side is helping to provide decisions as well as initiatives that will help to provide a lot more stability. So a lot of these inflows can be a lot more consistent. So it's not just on one-offs, and we're not just depending on short-term flows.
And I wonder how long the federal government can keep the elevated yields, because it's costing them more, even though not as much as Eurobond.
No, I agree with you 110%, but I think, it's a case of, at the moment, it's a case of providing, that stability, so we need to, you kind of almost using a poor analogy of you crawl before you walk, so essentially, let's start getting those flows in. And as those flows are coming in, that's going to provide a certain level of stability for the economy. And as that is going on, that would provide, some time to, provide a lot more long-term, initiatives that would help to provide more stability and also make Nigeria, a viable place for investment, which is long-term what we want to get to.
Yeah, obviously. Thank you so much, Demola, for your time, and have a great marketing day.
Thank you for having me. Yeah.
All right, so that's where we'll draw the curtains back now to Sunrise Daily Studios.